Hi everybody, Alex Employee here from Expert Forex, and we're moving on to video 2 in the series about the currency selector EA. And in this video, the training revolves around using the trendiness tables, which, as you can see on your screen, is the first table for this particular EA. Okay, so let's start with the headings as they appear in this table. And firstly, the symbols are mentioned being all the crosses of the currencies that you specify in the settings side of the EA. Then the first calculation that happens is the daily ATR. So that is the average true range, in other words, the average range that the price moves from its high to its low during a particular day for that particular currency. And if the movement is big, like down here, it will move 185 pips, and if it's small, it will be in the region of 40 pips. So that's the scope that we're looking at right now. So in general, these are the low volatility currencies and these are the high volatility currencies. And that's a generalization, but as you can see by the numbers there, and especially if you're measuring them over a reasonable amount of time, like a month or 2 months. Now, just to remind you, why is this important? Because if you want to trade a sideways type of technique or robot, then you would go for currencies with low volatility, as they are more inclined to trade sideways. If you are looking at breakout techniques or trending techniques, you would go for higher volatility currencies because their movement is much more severe. Also, what's quite handy is stops and targets. Now, a stop of 40 pips might be good for a low volatility like that particular currency, but a stop of 40 pips for a very high volatility currency is inappropriate. Your stop is going to get hit very easily by just sheer volatility, daily volatility within that particular currency. So it also gives us an idea of the size stops and targets we need to use when trading with these currencies. So with the pound New Zealand, you can have really big stops and big targets. With a New Zealand USD, for instance, you need smaller stops and smaller targets. So the volatility does give you that kind of guidance too. Then, besides the daily ATR, we also look at the weekly ATR. We say how much does the price move within a week, and on average, how much does it move on a monthly basis. And as we know, these columns are all sortable, so you just click the column and it sorts them in order. Now, why I've put in the weekly and the monthly ATRs is that there's also an element. If you've watched one of my previous videos, if the price moves sideways and still has a high volatility, it might not have the trendiness that you would think it would have. Whereas you could have a low volatility currency that actually is moving a lot during the week or a lot during the month, and that would be a more trendy currency. So that is why I've listed these readings, because what I then do is I take the weekly reading and I divide it by the daily reading, and that gives me an idea of trendiness of that particular currency. So let's sort that column there, and we can see that during a week the pound Oz moved almost 300 pips, but on a daily basis it moves 170 or 180 pips. So it is in fact not that trendy. It's not trending that much than a currency like the New Zealand, who's got a daily movement of 40, but a weekly movement of 127. So it moves 3 times. The daily is almost 3 times the weekly, whereas here it's only 1.7. So this is a more trendy currency than that particular currency, although it's moving more, but in relation to its volatility, it is less trendy. So let's look at the monthly. So then I take the monthly and I do exactly the same calculation, and we can sort this column just to make sure it's right. And again, you get the same kind of thing. The pound Oz has in a month has moved 689, and its daily volatility is that. So the daily volatility as a ratio to the monthly is 3.8. Now, if you look down here, again, the New Zealand 40 and the monthly movement is 250. So that particular currency is more trendy because the ratio shows that it moves 6 times its daily volatility in a month, whereas this one only moves 3.8 times its daily volatility in a month. Now, here's where some trading experience may be required, because although this has got the highest trendiness factor, because it has a low volatility, it's still not an attractive currency to trade on a trending or breakout basis. What you're looking for is a reasonable trending factor in this column compared to the volatility that exists. So for instance, if you are trading a breakout or trending strategy, you would choose a currency that has a reasonable volatility, like the pound yen has got quite a nice reasonable volatility and a reasonable trending factor. That one's going to give you better trades in a trending market or a breakout market than the New Zealand USD that will most probably only trend 120 pips in a week. Here at least you've got a nice high factor. You can see that it will trend over 200 pips a week. And those are the kind of currencies you are looking for that have reasonable trending ability. So although this table provides really very good information, you still need to apply a reasonableness test and say, look, my particular method of trading, I like going for 100 pip target, and I like to be in the trade for about 2 or 3 days. Then you need to then say, all right, well, if I want to be in the trade for 2 or 3 days, let's have a look at the weekly ATR. Is it reasonable? Has the currency got a reasonable trending ratio? And then select your currency appropriately. Many traders will in fact regard the New Zealand USD with a daily ATR of only 40 and a weekly ATR of only 120 and a monthly one of only 250 as a sideways trading currency, although it has the highest trending ratios. So the best guideline is really to get a good balance between the volatility levels and the trendiness of a particular. Now, I must say, over the years, I have found the pound yen to be the most reliable currency from that perspective, in that it gives you really nice trends. It really gives you nice trendiness with really good volatility. Now again, if you do have any questions around about this table, there is no right or wrong answer. You need to interpret the table according to your trading needs. There are warnings here that say don't use low volatility currencies if you're going for trending and breakout strategies, and don't use high volatility currencies if you are going for sideways market techniques and robots. Next, we're moving on to video 3, and in the top right hand corner of your screen you should see a link to video 3 right